Hi guys, welcome back to the weekly video in 2023. Happy New Year. I hope you all enjoying your day, all enjoying your new year. Thank you for all your support in 2022. I look forward to seeing each and everyone's growth in 2023. I'm excited for this year. I hope you all are ready to leave your bad habits in 2022 and grow your investments, grow your portfolios in 2023. So every day every week we'll go through some of the tickers. I'll try to bring on a little bit different as well, just to talk about how the company is doing, what their PE ratios are, or what are the things that I currently have in my portfolio and what are the reasoning behind it? What is my research? So I'll try to include one each week so you guys can have a background on what kind of research I do, what are the things that I'm looking at when I am buying, because we are going to be getting some really amazing deals, to be honest, this year that can build our long-term portfolio. So when I'm talking about these shares or I'm talking about these long-term, this is where you want to see the compounding interest. This isn't something that you're buying today and you're looking to get out a month from now, 3 months from now. These are the shares or these are the companies when I do the research that I'm buying in for long-term. I'm buying for 5 years to 10 years. That's what I am buying into it. And the number one thing I also look at these companies is who are they run by, not just their books. It makes a huge difference of the company. Who is their president, who is their CEO, what kind of team is running it, right? If you have a good team, any business will do good. You can have, good business and not have a good team on it. At some point, there will be a breakdown. So you want to see when you do your research, obviously everything is important on that, but do pay attention to what kind of team that is running it. So I will try to include, again, each week what I am looking at or what I have, what research I have done it. So hoping that will help as well to grow your long-term portfolios as well. Going into 2023, just, I've said it before, don't be greedy. Take your 10-15% as your account grows. Try to take multiple contracts and then leaving the 1 or 2 contracts. And those are the ones that will pay you with runners, because that's a stress-free, that you don't have to hold your full position to find out if you're getting the 100% or the 500%. But even when I leave my runners, I either have a trailing stop or I have a break even on it. So then I don't feel bad. Oh, I didn't get to take I didn't get to take the full benefit of my trade, or I missed something. Or if it even turns around, I know at least I'm getting out of it with the money that I put it in. So try to build those habits. I'm never looking for a home run on any trade. All I'm looking for is my money to turn into 10-15% on the first 90% of my contracts. So whether it's a bot alert or in the live trade, I always share when I'm taking profits, and you'll see majority of the time I'm taking my profits at the first 10-15%. And that has helped me build my accounts. That has, I would say, honestly, been my biggest strength, that I'm able to take my profit and not have that FOMO. Oh, I should have held all my 40 or 80 or 20 contracts and I would be here. No, because I have also seen at the same time how, trades do turn around and how quickly you go to red, and then you're like, oh, kicking yourself. I should have taken that 10-15%. So I follow my, rules, my goal, and where to get to my goals because of following those rules. And same thing with during the daytime, if you're doing live trading or you're doing day trading or scalping, whatever you're doing, honestly, our brain can only make, I would say, 2 to 3 best emotional decisions. And when it comes to trading, it's all about emotions. 90% is your technical, 10% is your emotions. So if you are taking more than 2 to 3 trades a day, sit down, go through it. What was the your win percentage. Why were you losing? What are your first 2-3 trades, your winners, and then after that you ended up giving all your money back? So try to see if you can only take 1 to 2 trades a day and keep the emotions out of it, so you don't keep giving the money back to it. Why? There's enough rich people from the market. Why keep making them richer? So keep your money. Try to not over trade. Make some good rules, not just strict rules that we're all humans. We all make mistakes. We all at some point break those rules. But however, if where you broke it and what was the outcome of it and what you need to change, that will really go a long way for 2023. Stick to your plan, write down your plan. I don't ever get into a trade. The first thing I always have is, how much am I willing to lose? If I'm taking, let's say, a $5,000 trade, I know exactly how much I'm willing to lose, and I'm not going to let it go below that. So if you do the same, your mindset will change, and you will never be letting your, losing trades go to 70, 90%. And then for winners, you're only taking 10, 20%. So, make that rule for yourself for every trade. If the answer is that you're willing to lose only $25 to $100, then that is it. Don't let the trade go more than that. You will start falling it. All right, so before I keep on going on and on, let's see, we do have an exciting week coming up. A lot of data is coming out. We've seen in 2022, the bond market has clearly given us an indication that, Feds are not going to be slowing down. We're not going to be seeing these rates come down anytime soon, at least not, I would say, 2023. If it is going to be, I would say maybe at the end of the 2023, I think Feds are going to be very much making it very clear. I'm hoping they do this FOMC minutes that come out on Wednesday. So this week, I think we're going to see a lot of information that's going to be coming out. But also you have to remember, at the beginning of the month, we do get a lot of new money that is being invested into the market. So keep that in mind. If you are seeing, small run-ups or things are moving upwards, that's not the trend change. That is not meaning we are into a bullish market. That basically means at the beginning of the month, new money is coming. It's like when kids get their allowances, they tend to use up at the beginning of the week. They use it in the first day or two, and then after that, they're looking for money for a lunch money again. So basic understanding or basic way to remember things is, there's going to be new money coming in. That money is going to be used up. And then after that, we will start to see some real moves, especially starting Wednesday. I would say we do have quite a bit of data coming out, and especially with the FOMC minutes coming out, that is going to be a key. And the other big thing was on Friday, I'll go over it on reverse repos shot up 2.5 trillion. That means our reserve repos must have fallen. And whenever that happens, around that week or around that time, market also tend to go lower. So whenever the reserve goes down, we will see market go down. And however, the reverse repos went up. So we'll look at those things and we'll see what's coming up. And then I do have a couple charts that I am definitely looking and keeping an eye on for the month of January to start my longer positions into the puts as well. So we'll see what we have coming up. All right, let me share my screen here. All right, so we can see that we have quite a bit of coming up this week as well. The main thing that we want to watch is on Wednesday, the FOMC meeting minutes. And then after that, pretty much all of this data is going to affect the market. So paying attention to, Thursday and Friday, always mark these times on your charts as well. So you don't end up taking a trade when there's any sort of news is coming out. So that way you can remember that, something is coming out, that you don't get stuck into any of the trades. As we talked about the reverse repo, so here I can show you on Friday, we finished at 2.5 billion in trillions of dollar in reverse repo. So as I said, that also affects the market. And what happens is, the reserve balance is most likely dipped below as well. And then within a couple days or within that week, we also see that will affect the stock market, that we start to trend or start trading low as well. All right, let's look at our charts. I have SPY up here on the daily. This is a pennant. So we are right into the pennant, and we want to see, again, 382 is a pretty strong level that SPY's been struggling to break above it. So if we can break above, I would say you want to give yourself a little bit room before you start going all in for longs. 385, 387, those are the two levels that you want to watch and see if it is going to cross and be able to continue it. We currently did close on Friday above the 10 moving average, but are we going to continue with this, run up or continue to break out of this pennant? So if I were to pull down the same SPY chart down to the 1 hour, you could see this as a symmetrical triangle as well. So if we do run up, this also kind of gives you right here that it's been struggling to break above and continue to pull back. So if we do get rejected any of that levels, you definitely have more room to the downside, and we have a couple gaps to fill as well. All right, so let's look at the US 500 as well. Where we are on the daily. Actually, market is open right now. I am recording this video on Monday. I'm actually completing the video on Monday. So looking at here, looks like a very nice rejection. And if I go down to the 5-minute, we might have gapped up. Yep, we did gap up and came down and filled the gap. We're sitting right at the 200 moving average. Looks like we're bouncing on the 200 moving average on the 5-minute chart right here. Let's see if we did have any fair value gaps or any of that stuff. We do have some at the lower side of it to fill, and want to see if it's going to continue to the downside. So we'll see when we wake up in the morning if, this trend's going to continue to the downside. We could see overnight bounce as well, that at London Open, we see that this thing might wants to come back and continue to the upside of it. So we do have these imbalance in the volume right up here. Then we have the fair value gap. Then we have our supply coming up. Then we have the high of it. So there's quite a bit on the upside as well. So I wouldn't write it off right away that we are going to be going down. I would definitely wait to get a confirmations. Bounce on the futures above 3,800. If it stays above 3,800, does has a room to continue to come back up again. Or as we see, we've already rejected. Even on the futures, looks like we rejected right at the 3,900. That was the high of it when it opened right here today. And we rejected right at it, the 3,900 area. And since then, we've been pulling back, and looks like it's starting to lose the 200 on the smaller time frame as well. So a couple of these things that you definitely want to watch, and not just go in direct, go long or go short. Wait for it to see. Definitely has more liquidity on the downside of it, side of it, if it's going to come in, grab it. All right, let's quickly look at our VIX as well. Okay, we're currently above this 2164 level. For still, I like to see VIX to get above the 2478 area for us to say, okay, we are really now going to be pulling back, and on SPY you start to see new lows. But this VIX has to get above these two levels for us to continue to start to see some nice pullbacks. So it's currently above 2164, but I would still definitely wait to see what it does on those levels. Dollar below the 10, starting to move up. It needs to capture above 104.68. Again, if captures this, VIX should be coming back up and your market should be pulling back. So those are the things we definitely want to see. All right, the two tickers that I want us to start paying attention to is Mark. This is your daily chart, and you are starting to see a very clear bearish divergence on your RSI. You can see your price is trying. However, your RSI is making those lower lows and giving you the bearish divergence on it. And the secondary test of the supply zone and now pulling back. This one will, with the time on, will set up for a very, very nice trade. Just make sure that you buy plenty of time on it, just because it's been making been running for a while, and this is when it does pull back, when the rest of the market does start to pull back, you will see that this one is going to pay pretty nicely. So I would definitely watch to see how it can break below here, your 110.95, or give yourself even extra $109, and then see if it can pull back. It is pretty far away from the 10, so definitely has a room to pull back. The next one is Lilly. Same thing, we're sitting right at the 10 moving average on the weekly, but on the daily, you have a same sort of bearish divergence building on Lilly as well. So as soon as we lose that 10 moving average, and it has a more room to the downside of it, and lose this, which was demand, now it's gonna be, we wanna see, because it's been used already. So if we start to lose this, then we are gonna be breaking below these structures. You got a more room down to the 200 moving average. These two are setting up very, very nicely. So I would definitely pay attention to that. So let's go to Apple. And what I wanted to show you guys was, let's go to the monthly. On the monthly, we have already, what is this? All right, and can I use add another indicator? Yes. Let's change that to 50. And change the color. So what I wanted to show was Apple, every time it has come down to the 50 moving average, it's recovered it pretty quickly and bounced it. We had it right here. We came very close to it right there. And then we came very close one more time right here, June of 16th, and then January 2019. So we came pretty close to it. And we are coming close to the 50 moving average as well. So if we are pulling back and the market is going to continue to pull back, you want to see 108.72 will be your target on Apple, that it could pull back from here and then bounce. So definitely pay attention to this for sure, on the monthly chart with the 50 moving average. So I'm gonna just hide everything, and then if you guys 12-month chart. Look at these candles, these red candles. I'm actually going to hide the drawing to all. Okay. So this is your 12-month candle on Apple. This is your 12-month candle on SPY. Like, it's like 2021 never existed. We literally took all of the profits from your 2021, and the 2022 candle was legit, like just red. So let's look at a couple of other ones too. Microsoft, same thing. QQ, it's like 12 months is telling you a story. We looked at Microsoft. Let's look at Tesla. Listen, right. Look at that candle on Tesla. We've literally taken pretty much all of the gains from Tesla as well. And you'll see, I actually have a really low target on Tesla. I'm looking at somewhere in the $55 to $65. I'm not saying it's going to happen right away, but definitely it's setting up for it to come down pretty low. So if you are starting to buy some longs, wait for it, look at some of these companies and let them turn around, especially Tesla's news came out, the delivery numbers are low, so pay attention to that. And then the next is Costco. And this one has is in a demand zone, but I want to see before I go long it to get above the 10 moving average before we think about going long. Just because if we look at it on the weekly, we do have this triangle, this diamond that I would like for it to retrace. And if it does retrace here and gets rejected, it's going to be a really nice short as well. All right, that's it for me. All right. I hope you guys enjoy it. I hope you liked the video and please don't forget to like and subscribe. If you have any questions, feel free to put them below in the comment or feel free to message me. Really wish you all the best in 2023. Looking forward to seeing some more millionaires this year and all the best. I will see you guys next Friday. Thank you.